if I suspect, this is where you're supposed to be taking notes, if I suspect that the market's going to be problematic for me, meaning that it's either going to be very hard to read, and I'm expecting that because of some news driver that would come the next day or later in the afternoon, like FOMC, I will adopt the 7 o'clock to 8:30 time window if I want to trade pre-market. So before 8:30 news driver comes, if I see something that I want to participate in, and I think that the news driver at 8:30, what I mean by news driver, any kind of report data, um, some kind of market medium impact or high impact news event that usually gets released around 8:30 New York local time. If I like the market structure that's in play at 7 o'clock going into 8:30, I have no fear of getting in a trade and using the 8:30 hour to roll right into my targets, which is what I showed this morning on Twitter. I went through the preamble of going through why I felt that the dollar index was likely to go higher, why I felt that the foreign currencies were likely to go lower and ES would go lower. I said that Forex and the equities like ES would seek sell side, meaning my bias was bearish. I prompted you to take a look at your chart for new day opening gap. And for those individuals that are following on Twitter, all you have to do is go back to the time when I tweeted this morning asking if you've done what I've been teaching you to do. You would see the effects of price action here with the new day opening gap. Folks had already had it on their chart and they had been sharing it, and they replied also with what they were shown. So this level here, that's the consequent encroachment of a previous new week opening gap. So when we ran up to new day opening gap here, which again is, for your notes, the closing price at 5 p.m. and then the new opening price at 6 p.m. That hour gap that futures have every single day in the evening time in New York local time, that difference, whatever that range difference is, it could be several handles or it could be one tick, just like this. You want to have that annotated on your chart throughout the day. It's a reference point that the algorithm will refer back to. But that new day opening gap, it ran to that quickly. Would you agree that that was a real quick run up into that? It's occurring at that 7 o'clock hour, New York local time. So 7 o'clock in the morning to 8:30. If there's going to be a difficult time in trading, if I think that we're going to consolidate or we're in low probability conditions, that is the green light. Okay, if you want a bat symbol, okay, the bat sign that goes up in the sky at nighttime, if you want the inside track, the little nudge from good old ICT, that means that I'm probably going to be taking something before 8:30. So you were prompted this morning to look for sell side in futures and in Forex. You were prompted to look for higher prices in dollar. I gave you the bias. I gave you the premise of what I was looking for. After I gave that, I engaged and did my own executions. I looked for the market to move away from the new day opening gap, which it did. I waited for it to trade down to the low of the previous week's new week opening gap. If you look, give me one second. If you look at the move away from the new week opening gap's low, we had displacement to the downside. As the market moved away from this level, do I need to be up here to get short? No. Did I need to sell short here? No. How about this one here? I could have got institutional order flow entry there. Yep, could have. Didn't do it. How about here? I could have traded back into that. Yep, didn't do it. I waited. I wanted to see it trade back to this key level, which is the previous week's new week opening gap. Then I waited for what? Displacement. I want to see it move sharply away from it. Then, because it did that, what happens? We have a fair value gap right here. So that fair value gap and the last up close candle at the new week opening gap. Which order blocks do you use, ICT? You're learning. There's multiple things about this. It's not just the last up close candle before the drop. That's no, that's not it. It's where you're at when that candle forms. And this new week opening gap, none of you were aware of it until I started teaching it. But when we're looking for order blocks, that change in the state of delivery which is what an order block is. It's not the candle. It has absolutely nothing to do with the candle. It has nothing to do with that candle. It's the change in the state of delivery. The market changes the state of delivery right here. Once it starts delivering sell side and you have a fair value gap, your eye goes right back to that opening price. It's going to trade up into the fair value gap. That's where you want to try to take your entry. You allow for the price to trade up to that level, because if it does, then you do another entry there as well. If you hold out the trade to the order block and don't put anything on inside the fair value gap, sometimes the order block will not be traded to. The fair value gap will be the only respected level, and then the market will run away without you. And that can be very frustrating, because if you demand absolute to the tick precision for all of your executions, you will miss moves. The market sometimes simply will not move exactly where you want it to go, or you'll be so picky about your entry, your limit order won't fill and it runs away. And then you have to use a lower, closer proximity entry to a price point that's lower than the key ideal entry points, like this one here. So the market moves again, small little movement into this candle's high. I like that. Added more. Go back and look at the Twitter example, okay? Because I shared this, I recorded it. It's there, and you can see my execution, the whole business. And then we had this fair value gap that formed. What kind of fair value gap is this? SIBI, S-I-B-I. Sell side imbalance, buy side inefficiency. I noted real time. I removed it here for clarity. I wanted to see this remain open, and the market moved lower and attacked the sell side in here. All of this setting up for what? A move going into 830. The market consolidates going into the 830 hour, and I mentioned that we would see it drop aggressively, sharply, and into the 830 news hour. So the news event that came out, I don't even know what the data was. I couldn't tell you to save my life. If you offer me $1 billion cash to tell you what the data said for that report, I couldn't tell you. I don't ever give a shit. I don't care. I just expect the volatility that comes in the marketplace at that time. Once I know I'm looking for a run, then I'm expecting that 830 hour. If I know that the day that I'm about to trade is going to be a range bound consolidation day or just choppy, I'm going to be doing my work between 7 o'clock and 8:30. And once the 8:30 news driver kicks in and runs to the liquidity I'm looking for and fills my order, like you watch in the video I shared on Twitter, I'm done. I'm not going to worry about arm wrestling the market the rest of the day. I could care less what it does, because my analysis was calling for what? A difficult trading market. So if I'm anticipating a difficult time, why not go in and get my money before everybody else goes into the party? I want to show up, eat the food when it's fresh, leave it, and everybody else comes there and gets the stale bread. And they're wondering why it doesn't taste good. They're working so hard for it. I'm getting in, getting out. That's what you want to do. I'm trying to teach you how to be more efficient with your time, more efficient with your risk. Because if you're going to assume risk, you might as well just do it when it's the best time to see markets moving, right? Do you want to just go in there because the trading hours are now active and everybody else showed up? Or do you want to be in there when it's really good? Get it and go.